Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 16th of October. All right, we had two key pieces of economic data out yesterday during the North American session. And let me just scroll up a touch and we'll just run through that quickly. Now, the retail sales figure, which is a key number for sort of general economic growth, you can just see where it's very visual. It's a very public number. Minus 0.1 for the ex-autos and the core retail sales number. Now, the expectations were for 0.6 and 0.4. Now, I read a lot of articles yesterday. They were suggesting even plus 0.7 or above. So this is a real sort of, a bit of a slap in the face to the US dollar. But if you have a look at the dollar on the dollar index here, it hasn't done a hell of a lot. It's come off about 30 or 40 points and just sitting around a support trend line at the moment. And that's because there's a cocktail of geopolitical events sort of still simmering that the market's still trying to work out what the hell's going on. All right. Now, if I just come back over to the news first before I go to the currencies, if you have a look here, there's a whole range of things. Now, if you look at the general news as it unfolds, now this is good. The US, what we're talking about with the US dollar is an actual tangible economic number that the market can work with. Now, it's a weaker number, right? So that's a good thing. So that's all like normal market conditions. Let me just clear that screen there for a second. And then you've got, as you go down a little bit, you start to see where the geopolitical situations come into play. Now, China, I mean, they're all up to all sorts of things. But the other thing, before I get into China, is the Canadian business optimism levels are through the roof. Now, these levels, if I just come back to the Echo data from yesterday, there is actually a number released with this. If I just scroll down, you'll see the business outlook future sales. Now, these numbers, the thing is with these numbers, they were hugely positive, and they were done before Brexit, before NAFTA came out or was finalised. So you'd expect these to be even stronger. So those business outlook numbers have had a huge impact on dollar CAD. So weak retail sales, obviously dollar CAD was the best moving pair on the back of weaker US retail sales and also the optimism from those business outlook surveys. So dollar CAD, it sort of dropped about 80 points, and then it's just come back a little bit because the market is still uncertain what to do with that weaker US dollar. Now, this is because dollar yen, right? Dollar yen's been sort of moving lower on concerns of global growth issues. And that comes back to weaker equity markets that we saw halfway through last week. Now, US equities were down, well, the NASDAQ was down 1%, but the Dow Jones 0.35, and the S&P 500 down sort of 0.6. So it's still a little bit of negative sentiment there, but not enough to get dollar yen moving, the safe haven pair, right? So that's where the dollar hasn't done much there. Now, Kiwi liked the weaker US numbers, as did the Aussie, but the Aussie sort of bounced about 30 ticks and then really sort of dribbled off. So the Aussie and Kiwi, they have been in a bearish sentiment, but they are starting to break higher just on weak US sentiment. Now, you can see here also the euro, it's had a little poke above that resistance line, but it's come straight back down. Now, there were some regional elections in Germany over the weekend, and the far right smashed it out of the park. So what that shows you is political uncertainty or political unrest in Europe is still there, right? And that's, if it starts to hit Germany, I can tell you that will have bigger impacts if it gets continued movement there. Now, sterling, once again, Brexit this weekend. We're seeing various bits and pieces on this. I think it's too hard to trade, but it is still trading sideways for my liking, even though it's in a big range. Now, if I just come back to one thing I wanted to show you is actually just having a look at the daily analysis snapshot. Now, if you come over to MyFX Trading Hub on our site, now, one of the key things, I had some really good questions yesterday about the data analysis snapshot and why all these pairs were in a sideways moving sort of, as far as I was concerned, sentiment. And when I say sideways, I mean, it can basically go up or down. It's pretty much no direction at all. Now, let me just show you where I get this from. And I wanted to give you, this is probably a good thing to go through for most traders. Now, I do have the major currency pairs on various charts. Now, this is euro, right? So it has moved higher. If you look at the big picture, okay, so on the hourlies, yeah, it's slowly moved higher, but it's still within the recent range. here's the daily chart, right? You can see it is just trading sideways. And even on the weekly chart, it's trading sideways. So fundamentally, there's nothing that the ECB have told us. And technically, it's not doing anything outrageous at all. I mean, it's hardly doing anything at all. It's just trading sideways. So don't get fooled by the noise. You come back over and look at sterling. Once again, you've got a situation where, you know, on the hourlies, it's just trading sideways. The daily sideways. And you can see here as well, on the weeklies, it's also trading sideways. So once again, the picture technically comes from, you know, a combination of all the time zones. The Aussie dollar, okay, it's pretty much the same for the Kiwi. On the hourlies, it's starting to look like it wants to sort of move to the top side, but on the dailies, still down. If anything, right at the moment, a little bit sideways, but still the overall trend is down, and that's down on the weeklies as well. And then you come over to the Kiwi, once again, the same sort of situation. So we aren't getting a match up with the hourlies and the daily chart. So the technicals aren't exactly clear. Like the Kiwi has broken a little bit high here. We do have a level up around sort of 66.15, but on the big picture, on the dailies, it's still moving lower. And then on the weeklies, it's also moving down. So you've got really mixed technical picture here across most of these pairs. The dollar index, now, this is why trading has pretty much stalled at the moment. You've got the bigger picture here. Now, I see, dollar drifted off last week, but it's now sort of trading sideways, even though we've had those weaker retail sale numbers. Now, have a look at the daily charts. It's right in the middle of the range, and it's already topped out and trading sideways on the weekly charts there as well. So once again, there's no clear technical picture on the US dollar index. Dollar yen. Well, this is actually, dollar yen's about to sort of almost turn. Okay, we've got a nice sort of short-term downtrend here. Long-term, it's still in an uptrend, but we are at a critical level here. So, I mean, it is oversold, but you know what? This uptrend is still in play until that trend line breaks. So, to me, it's just on the weeklies and dailies. Well, dailies still going up, hourlies down, weeklies sideways. So, once again, dollar yen, no clear technical setup at this stage. Dollar CAD, okay, if you're having a look at the funds, it's dipped down lower, but you can see here on the hourlies, if you wind out a bit of time frame here, it's pretty much still within the recent ranges. Dailies, it's right bang smack in the middle of the range, same as the weeklies. So don't get excited that these things are moving yet, because they are not moving on the bigger picture overall. If anything, dollar Swiss, very much like dollar yen, has sort of broken down on the hourly charts, even though it's within recent ranges. To me, it has to get back down below this old resistance line, which is now acting as support before it goes into a downtrend. At the moment, that's sideways, and it is sitting at the top of the range here on the weeklies, but still just trading sideways the last 3 weeks. All right, so that's the technical picture, and that's where, when you come back and you look at your charts, and you really are trading off your hourly charts, but you need to have an overall perspective around your analysis. All right, so what we do have is, at the moment, if I just come into these, focus on the hourly charts, Aussie dollar, well, there's nothing happening locally in Australia. The movements at the moment are on the US dollar, and that's a little bit of weakness, and also the dollar yuan. Now, the PBOC, the head of the PBOC said they may cut rates further. Now, if you just come, actually, let me just come across this. It was actually pissing me off. You look at this move down last week. It's almost like the central bank, so they've intervened in dollar yuan, so strengthening the yuan. It gets smashed because I think they know that all the US traders and all the speculators are long dollar yuan because it makes sense, right? It comes back down, and now it sort of just ricochets back up. Now, they've changed their interest rate profile already. Now, that was already telecast on the 7th of October, but they've come out again just saying, if I just come back across here, where did I see that? They've come out and started talking about cutting rates even further, and here it is down here. China yuan eases as PBOC head sees room for interest rate changes. The reserve requirements, okay, were adjusted, but they're talking about doing it again. Now, if you're telling me that they didn't, or the market, or the traders in China, or whoever's in charge over there, wasn't filling their pockets up down here, That comes out. Of course, the yuan depreciates. It's a classic case of manipulation and getting involved in my case. Now, they've already sort of had argy-barges with the US about this, and the US have saying you manipulated the currency pair. They had to change it because the Chinese were very upset about it, but it's actually the truth. I think this is absolute chaotic. Now, so you got dollar yuan, but it is back in the range. Right? There's nothing really going on. We need to see weaker Chinese numbers before this thing takes off properly. Now, if you have a look at the correlation matrix here with the yuan, be very careful what you are trading. Now, when the yuan first started coming into play, the Aussie and Kiwi were up around 80-something% or above 80% with the correlation with the yuan. Now, they're back to both of them, Aussie at 50 or almost 60%, same as the Kiwi. Euros even come into play at 55%. So don't forget. So don't think if you're trading the Aussie or the Kiwi on the yuan, it's not as impacting as it first was, right? If anything, the gold still almost 75%. That's the pair or the instrument that you should be looking at with the yuan. Okay, so that's just keep an eye on that. Now, what's going on today? So if I just come back to the MyFX Trading Hub. Now, once again, we've got some good data coming out in half an hour. Now, still geopolitics dominating. Yeah, I think so. And that's why the weaker US retail sales figures really haven't impacted yet, because we've got this situation with Saudi Arabia, and that could impact oil pricing. It could impact a lot of things in the US with regards to Boeing and all these other things. I mean, I read some ludicrous stuff yesterday that Trump was talking about, well, we can't stop selling them arms because it's worth too much to us. Now, that sort of discussion is usually kept under cloak and dagger. Now, Trump is bringing up arms sales as like it's a good trading commodity, which is completely insane when the world's trying to be, world peace and lots of stuff. So anyway, that sort of blew me away. So geopolitics dominating, weaker dollar slightly, weaker US dollar. Now, what we've got coming out today? It's a pretty solid session coming up. And what we're talking about is we've got Kiwi CPI, okay, very important obviously for the Kiwi. Chinese CPI, which will be important for dollar yuan as well as the Aussie and Kiwi, even though that impact is weakened somewhat. Then we've got the UK employment numbers. We've got the employment rate, the employment change, and the average weekly earnings. The Bank of England has been focusing on the average weekly earnings. That's very important, so keep an eye on that. But don't forget, we've got Brexit and this Brexit summit coming up. So these numbers may be pushed aside. Just be aware of it. There's three variables. It's a hard trade, and then you got Brexit. So to me, this is a really wait and see. If you are looking to trade it, really decrease your trade size because you don't need to get involved when there's uncertainty around those geopolitical events. And once again, we do have the industrial production numbers out of the US. This is really good because after the weak retail sales numbers, if these are weak, well, then it will get the US dollar falling. If they're strong, well, then it just counteracts that weaker retail sales number. So keep an eye on that. We've got a very active session, trade day across all sessions. And that's where I see things going. And just once again, a refresh on the analysis snapshot. At this point in time, we do lack direction, particularly in the dollar. And that offsets all these other pairs because there's not much happening except for dollar Canada, actually. But still, it's within recent ranges. All these other pairs, the central banks are sitting put at the moment. Okay, to me, the fundamentals in dollar CAD still point to a lower dollar CAD. That is shining through. So I think selling dollar CAD on rallies, to me, is going to be a good opportunity, but it will come down to those US numbers. If the US numbers are weak, well, then it's a good chance to get into dollar CAD. That's what I think where the next best trade will come from. Of course, the Kiwi, we have an opportunity here coming up, but don't forget, liquidity on the Kiwis is pretty crap. So don't get yourself all bent out of shape by quadrupling your trade size. All right, guys, that's it from me. There's a fair bit in that, but lots of stuff to look forward to and a fair bit of learning in there as well with your analysis. And that's, follow the events. And that's where the momentum will come for the major currency pairs. As I said, most of them will be in play today through all trading sessions. All right, guys, have a good trade day. We'll catch you in the trade zone. Cheerio.